late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So today we're going to touch on the FOMC meeting that happened yesterday. So we did talk a little bit about that, kind of our expectations for that. So we basically see that kind of in line with what we had expected, the interest rates remaining unchanged, so that federal fund rate staying at 4.25 to 4.5%. This is the second consecutive meeting with no change. Not surprised, it's exactly what the Fed has been telling us, and then just based on the economic numbers that we've received in terms of employment, not enough to warrant further rate cuts at this time. Also with some mixed signals kind of around inflation as well as GDP signaling a little bit of uncertainty from the Fed. We do see the market's still expecting 2 rate cuts by the end of the year, so my kind of base case is 1 to 2 as well. You know, I'm going to kind of lean more towards 1, especially if we see further inflationary pressures from the tariffs. We also had Jerome Powell highlighting that, so we did see their economic outlook adjusted, so the Fed lowered its 2025 real GDP target. We see an increase in inflation forecast, so a little bit of a signal in terms of concern about potential stagflation. We're going to continue following that. We also see that quantitative tightening has slowed down a little bit, so we kind of expected that. I did mention, you know, maybe we just taper quantitative tightening a little bit here. So essentially, starting April 1st, 2025, the pace of the Treasury runoff is going to decrease from a max of $25 billion to $5 billion per month, reflecting a shift kind of in a more cautious balance sheet reduction. That being said, that we do still see that there's $35 billion worth of the mortgage-backed securities that they want to continue running off their balance sheet. So in terms of mortgage-backed securities, there is no decrease in the quantitative tightening, only a decrease in terms of the security treasuries that we see right here from that $25 billion to $5 billion. So definitely more bullish than not, in my opinion. That being said, it's also kind of just going to drag everything out a little bit further, kind of that peeling the band-aid off versus ripping the band-aid off type scenario. In terms of economic policy and kind of really navigating this well and not ending up in kind of a hard landing or a bit of a misstep in terms of policy that might push us into a more severe recession, I think kind of pulling the band-aid off slowly is going to be the better approach. You can just kind of tell the Fed's really uncertain about what's going on. There's a lot of uncertainty in markets kind of around consumer sentiment. We talked about that, different manufacturing indices that we looked at, and then all this uncertainty around tariffs. So we see the Fed kind of also taking the position that a lot of market participants are currently taking, and that's just sit back, maintain your kind of positions, and then be ready to react as we get the data that's going to kind of push us in either direction, either further up or more economic pressures, and we end up kind of having to go down a little bit. Markets maybe sell off there. So that is just something we need to pay attention to. Yeah, pretty much what we expected from the FOMC, so no major announcements there. Markets reacted positively at first. They've kind of sold off a little bit now, kind of giving up some of those gains. So we're just going to take a look here. We'll flip over to our charts here. So the first thing I'm going to start out on is the dollar, so the DXY. So basically, we've come into this level of support previously marked. We are in a bear flag structure. That being said, you can kind of see right through here, look how oversold we are on the MACD as well as the RSI. So I kind of looked back in history and we see 3 other times where we've had a similar setup here, basically acting as the lows for the dollar here. And then you can see almost every single time we've just been chopping in this range. So I've got this range low down here, and I've got this range high kind of up here. We were able to break out a little bit over here, but that being said, it has acted as more resistance kind of all through here. So this is the range that I'm looking at right now. We do see, so pretty much we saw our DMI minus line going on that extension right there. Same thing through here, same thing through here, and same thing there. The DMI minus minus line getting a big extension, losing that support of the ADX, and then we start to see that bullish momentum really build up after we've put in a bottom. So if we look back, basically this time here, it was a pretty quick recovery to the upside for the dollar. Same thing here, quick recovery to the upside. Right here, we actually saw a bit of a consolidation phase before we got that move to the upside. So just looking now, similar MACD setup, similar RSI setup, and a similar DMI setup, which makes me think, you know, we could be due for that reversal move to the upside. That being said, it could just result in a lower high. So this is what we're looking at, potentially a bearish cross that's going to occur of the 50-day and the 200-day moving average. But you can kind of see every single time we've just come up. So like right through here, we had a bearish cross, but price came back up, retested this moving average here before rejecting and continuing lower. So we're expecting at least a bit of a bounce here, likely into this resistance zone right through there. But we'll just continue following that. We can take a look at the lower time frame to try and get a slightly better idea of what's going on here. So we see on the low time frame that we are losing a bit of bullish momentum. So on the low time frame, we're still just stuck in this pattern here, just in this bear flag. So we just got these trend lines here that we're stuck under. Essentially, you know, nothing too crazy happening. We just see stuck here, you know, likely either going to break out and continue higher. That being said, you know, looking at the 4 hour, it doesn't look the best. We're probably just going to come back down, continue consolidating in here. So the thing is with the daily chart, it can take days, if not weeks, for some of those moves to play out. We could actually see something where we break lower first, and then we get kind of, you know, we start breaking down, and then we get that big move back up into these moving averages, but ultimately not able to take out these highs in through here, and then that continued downtrend. So like I said, we want the dollar to be in a downtrend for our risk on assets to perform well. Right now, it currently is on the daily chart. That being said, it could be looking like we might get a bit of a relief bounce here just based on all these indicators, but we'll continue following that. We'll flip over to the US 10-year right now. So we see basically that bearish momentum really picking up here on the daily. Same thing with the RSI and the MACD. We see those kind of bearish crosses incoming here. We're stuck under all our resistance levels here, getting that rejection. This is also looks like it could be a potential head and shoulders pattern. So I'll show you that, guys, really quickly. We'll take a look here, pull our patterns, head and shoulders. So we see basically right through here. I'm sorry about that. Don't know why it's doing that, sorry. Yeah, so basically what we see here on our head and shoulders, we've got our first shoulder, our head right through here, and then we've got a second shoulder. And so just looking at this right now, if we see basically a trend line between our two shoulders here. So we'll take that, we pull this across, and then basically what we're looking for if this neckline is to break. So what we would see essentially is price break below this neckline, come back, confirm that rejection, and then we're going to have to continue down to a lower target. I'll show you guys right now how we kind of calculate that. So this is going to be a measured move of a head and shoulders pattern. So what you do, you take a price range from the peak of the head, bring it down to the neckline. You can see right here we have minus 691. It's a little hard to see, minus 0.691 in terms of percent. It's a little bit hard to see there, but basically what you're going to do is take that amount, and then from where it breaks on the neckline here, we're going to take a similar thing, so same tool, and we're going to drag it down until we get that 0.691, and that's going to be our target for that measured move. So we see right there, 6.91 right there. So this is essentially what we're looking for as a potential target for that low in terms of the in terms of the head and shoulders move to play out. This is what we'd be looking at, 3.4%. You know, we do expect the US 10-year to continue dropping over the coming meetings, so we will probably keep trending towards that. We're going to flip over though to a different chart here. I'm going to take a look at the VIX. So the volatility index essentially also overlaid on the SPY. So we've got the SPY right here down below in pink, and we've got the volatility index right here in blue. You can kind of see the divergence between the two. So essentially When the volatility spikes, we see prices dropping in the S&P, and then we go through these consolidation periods where we're able to just climb, just climb the wall of worry, and then we get to this volatility spike. That's where we start to see the drop in the S&P, and then we go on those consolidations, and so you see every little peak here essentially where we extend above this red line is kind of coincides with a market dip. Same thing right through here. So the thing I did kind of realize is basically we were getting higher lows kind of all through here. Right here, this is a pretty big lower low in terms of the macro lows, so we need to follow that, and it looks like it is curling over, so that's kind of what I want to talk about. We'll look at the SPY really quickly, and we'll just clean this chart up a bit. We get rid of that. We'll switch to our candles, and then we will take a look at some of our indicators here. So those are Heikin-Ashi candles. So taking a look, we continue just breaking down. So still break down rejection from our resistance zone previously marked. We'll take a look at some different indicators here. So we'll look at our, sorry if I can find it, directional movement index, MACD, and the RSI right there. So taking a look, RSI curling over a little bit. MACD actually looks pretty good, looking for that bullish cross, but also the DMI still with more work to do, although we do have the bearish momentum kind of fizzling out a little bit here. So we want to see a little strength from the SPY. If we take a look at the 4-hour here, we can kind of see it trying to reverse on the low time frame. So I showed you this was that downtrend price action. Right now we've got one higher low, one higher high, and as long as the lows hold through here, we could continue up, but it's not going to be enough for confirmation on the daily. This is the 4-hour, so we're going to have to continue watching this for those subsequent higher lows, higher highs before we can go up and attack these. And then we're waiting for that confirmation on the daily chart, because that's going to be kind of the minimum for a general trend. Otherwise, it could just sell off again and continue down. So taking a look at the 4-hour, a little bit of bearish momentum kind of here. We're starting to see the negative line curling back up. So we'll have to follow this, see what happens. But for now, we still remain stuck under resistance. We're still in a technical downtrend on the daily chart. Nothing confirmed yet. So still with uncertainty, still expecting more tariff announcements on April 2nd. So just following along, waiting for that confirmation. Same thing with the NASDAQ. Although the indicators look pretty good, we're still stuck under this resistance line, so we need to really break out, hold it as support for that potential to continue up. Looking at the Dow Jones Index here, also same thing. We're just looking at these bearish retests, kind of rejecting at that was previous support. So you can see all through here was previous support, kind of resistance, and then acted as support, and then support, but breaking down, acting as resistance now. So we need to hold these lows. Otherwise, it's continued downtrend price action, not worth buying into in my opinion. Looking at the IWM, so the Russell 2000 bouncing from our support zone. Looking at our momentum indicators, looking a little bit better. We got that bullish cross on the MACD flipping green from heavily oversold territory. Need to see that DMI positive line curling up, and the RSI also continuing to curl up. TLT, not too much going on right now. We do see it's just kind of in a bit of a downtrend here, reversing it on the low time frame. So we need to continue TLT to show some strength, and hopefully it continues doing well. We do have a position in there running right now. DMI continuing to show bullish momentum, RSI with a bullish cross, and MACD with a bullish cross on the daily. So TLT looks good from an indicator standpoint. And then if we take a look at it on the weekly chart, it still looks pretty good, but we are in a bit of a downtrend here, so we need to really hold these lows through here. Otherwise, TLT, our position is going to be a little at risk. Either we're just going to continue adding a little bit more if we do come back to these levels. It does offer a good hedge position if markets continue to sell off, or we go into any more kind of recessionary forces appear, or more uncertainty, market weakness. This TLT is a bit of a flight to safety, so it is give us that opportunity as a hedge position, kind of different from our other risk on positions. And then gold just continuing up here. So on the weekly, just massive uptrend. take a look at the daily also, you know, just continuing to break out. So gold continues showing a lot of strength. So yeah, not too much going on there. You know, like I said, not interested at buying at these levels, just interested to watch the relative strength of gold versus other markets. We'll flip over, take a look at crypto really quickly. So I want to look at Bitcoin. One thing I want to talk about is basically I saw this crazy inflow of assets into Binance. So following the US dollar inflows into Binance is something that I like to keep track of. Essentially, what we saw here back in April 11th was just massive outflows. So $13 billion of USD flowed out of Binance. And then basically the next day we saw pretty much almost the same amount minus a little bit flow back into the markets. And then we actually saw, not right away, but kind of saw a bit of a pump following that. And then over here we saw 9.7 billion of outflows, and then the next day we saw basically 9.7 billion of inflows. Today, or sorry, a couple days ago, we saw 7 billion of outflows. So we haven't seen the inflows return yet. But if we do look back, so I kind of just looked at the chart the other couple times this happened. So the first time, April 11th, it is right there. So April 11th, essentially right around these highs, you know, price did end up bleeding another 30%, but after it found the lows there, it went on to rally 122% to the highs. Even if you bought right here when those inflows came back in, you know, that's still a 50% move to that high. So even if you bought here, you know, still a decent move there. Then we saw basically same thing happening on October 6th, 7th. We saw those huge outflows, and then the next day we saw all of it come back in. That essentially lined up right with the low here, and then we saw price move 84% to those highs. So interesting to see, and we're going to continue following that, see if we start to see those inflows come back. Otherwise, you know, it's not the best look for the markets. You know, you want to see money coming into exchanges because that signals that people are going to be buying into the market. So when you see a lot of money leaving the exchanges and then not coming back in, that signals that maybe people have taken profits in crypto and they're starting to move that money elsewhere. Maybe look at reallocating it in different asset classes. So it is something we need to pay attention to. We'll take a look. We're going to look at the low time frame today. You guys kind of know my thoughts on the high time frame. We are still kind of just stuck in this consolidation. You know, we're stuck under resistance. We got a lot of resistance through here. You can kind of see it, market here. So yeah, we're still just grinding away. We are on the 4 hour. We're reversing that price action, but it's not enough for that confirmation on the daily yet. We need to continue seeing strength from Bitcoin. We see the bearish momentum on the DMI starting to stack up here, and we see RSI and MACD coming back down to neutral levels. So they might have to come down to lower levels, start to bottom out. Take a look at Bitcoin dominance here. Continues just up, riding up in this wedge here, although on the low time frame, kind of reverse on that lower time frame downtrend. That being said, as long as it holds this trend line, it still could continue up for another leg, really push up, kind of put that pressure on the altcoins. We see Ethereum here down 5% on the day, also, you know, doing its work to really break out. So we saw this bear flag structure right through here. So what I want to see is, in the least, I want to see this flag hold. So we see pretty much as long as we can hold above this flag, we can continue trying to put in those higher lows and higher highs. We're starting to see, again, that bearish momentum creeping up on the DMI, as well as losing a little of the bullish momentum on the MACD and the RSI here at neutral levels. So we need to see these lows hold. Worst case scenario, we could come back to 1863 and still hold those lows and consider it still a decent potential to be a bottoming move. That being said, it's not a confirmed bottom. So I'm just kind of, what I think is happening right now is markets are trying to put in a bit of a local bottom if they can, but there is nothing confirmed on the daily or weekly chart yet in terms of the major indices that we're watching. So it's not confirmation in my opinion quite yet. Looking at Ethereum Bitcoin, looks a little bit better. We see that DMI plus line curling back up. We see the DMI minus line getting rejected by the 80 ADX line. We see RSI curling back up, and we see the MACD kind of coming here. So although a bit of a bearish cross on the MACD, it could resolve to the upside. But we are watching Ethereum, Bitcoin trying to bottom from here, but a lot of resistance above. We need to continue that higher high, higher low structure. We'll take a look at total 3 here. Also kind of similar price action. It is just continuing that uptrend on the low time frame. A little bit more bearish momentum stacked here as opposed to Ethereum, Bitcoin, but that's what I'm looking for. So essentially what I want to see in terms of in terms of total 3, basically I want to see us break out with this higher high, higher low structure continuing here, looking for a swing trade position on the breakout, and then looking to supplement that swing trade position with a spot position or spot positions in addition to that swing position that I initially start with. We'll take a look at others dominance also on that 4 hour, just trying to climb out of the hole it's in, still stuck in this bear flag consolidation, looking like a little bit more bullish momentum than total 3 or ETH Bitcoin. We've got the DMI curling up, we've got the the MACD looking like it's heading for a bit of a bullish cross right there, and we see the RSI kind of coming down, curling back up. So we'll continue following that. I also want to take a look at USDT dominance. So this is one that I talked about previously before. When you see USDT dominance in an uptrend, you generally see Bitcoin and crypto in a downtrend. So we need to continue watching this. We see a bullish cross of the RSI. We see a bullish cross coming up with the MACD, and it looks like we're going to experience a bullish cross on the DMI as well on the 4 hour. If we take a look at our daily indicators, a little bit more overbought here, so we are still in this uptrend though. So technical uptrend on the daily, indicators looking pretty bullish on the 4 hour, could be able to support a breakout move. So we need to continue watching this, and if we start to see USDT dominance continuing up, then it's going to put pressure on our risky assets like crypto. We'll take a quick look at the Bitcoin miners today. I'm just going to look at WGMI, so you can take a look at my previous Bitcoin miner video if you want to get an idea for different accumulation opportunities in terms of individual miners. That being said, I'm just going to look at the support that we have through here. So it's just sitting at this support zone. In terms of MACD, RSI, DMI, we are in the more oversold in terms of MACD, but that green histogram looks like it's slowing down, so a bit of bearish pressure could be coming in the near term. Still just stuck under this downsloping trend line resistance, so we do have a lot of work to do for the miners, and it's not going to come if we don't get some strength out of Bitcoin or out of the SPY. So still just watching this. For now, still holding support through here, and still pretty good high time frame value, but we want to be sure that we're getting on the right side of the trend, so I'm not too interested in anything right now. We'll take a look at some stocks today. Again, nothing too crazy. I just want to look at a few that I was talking about the other day. So I talked about Dell, AMD, and Intel are 3 that I'm kind of interested in here. So Dell doing pretty well, has bounced from our marked zone of support. It's currently in an uptrend on the 4 hour, so we want to see that on the daily. We'll take a look here. Pull up our momentum indicators, bullish cross, and looks like we were headed, hopefully we get a bullish cross on the DMI, but we might see a little bit of a rejection here as well, so we need to continue watching that. We might also see we've got a trend line right through here from this high to this high all the way through there, so we did kind of break out a little bit from it here, but ultimately rejecting back in. So just stuck under this downsloping trend line. That might be a little target here that we might go to, then look for that higher low, and then we can start to talk about a potential position here if the SPY shows some strength. So not rushing into it, making our plan and then waiting for that confirmation. Flipping over, we'll take a look at AMD here. So the same thing, I kind of had this downsloping trend line as well as this macro trend line right through here. So pretty much trying to break out of those. It's a similar type situation as Dell. We have kind of broken out if you take a look from this one here. Basically, if we look, we've broken out right through here, but it's not a convincing breakout. We haven't taken out these highs. So what we need to do is put in the higher lows, subsequent higher highs, subsequent higher lows, look at entering a position potentially there. So just making a plan. You know, we might look at this. We go lower high, higher low, higher high, higher low. That's going to be the entrance right there. And then we're targeting our Fibonacci resistance initially on a swing trade basis. So AMD, something like that I'm looking to play out, looking for that entry over here for that confirmation. A couple others, we'll take a look at BABA here. So down 4%. BABA's been pretty crazy. That's one I'm definitely interested in. So I talked about it recently, you know, looking at this support zone from about 125 down to about 117. So that could be a decent opportunity to enter BABA in terms of a position. It'd be a riskier position. Definitely looking at kind of buying more between 95 and 105 or 106 in this Fibonacci golden zone right here. So definitely looking anywhere between 95 to 125 for BABA could be a potential decent accumulation opportunity. Definitely trying to stack the buys heavier down on the lower targets. Well, taking a look at Intel here. So Intel, one that we were looking at, so we did come up. We want to see it hold these lows, but we could come back, fill this gap fill right through here, in which case I'm potentially looking at a swing position on Intel. So looking to kind of keep buying. I have a tiny bit right now, just a very small starter position, but I am looking to potentially add more at these lower targets, even down to like $18, $17, something like that. You know, Intel's at pretty low valuations in terms of its historic value dating back to the .com era, so it could offer a decent opportunity. I'm just looking at different names, even Tesla here, but I want to see that uptrend structure kind of a little bit better. Also, there is a little bit of bearish news about Tesla, but I'm not going to really get too far into it. There has been kind of a discrepancy on their balance sheet. We're unsure. There's not enough details around it to be kind of making any conclusions right now. But, I mean, even the price action just says it's not time to enter yet. We're going to wait for that confirmation, and then we'll go from there. So, if you like the content, if you learned something new, please share, subscribe, like. It all means the world to me, and I'll see you guys in the next one.